Awesome. I'm going to share my screen. And
oh, you're back.
You know,
there you are.
We're there. Okay, so here's what I'm hearing from a lot of people. Oh my gosh, you know, I want to get in the market. I think it's a good time, but I also have this fear that we're going to go back down, you know, to 19,000 on the Dow, and I don't want to. Were, you know, after the big crash, I want to profit, yet I don't want to, you know, be hit again. Are you hearing that, Dan, too? You know, from a
Yeah,
long-term
people are very,
perspective?
you know, it's almost like they've burned their hand on the pot, right? And they're you know, they've either pulled, they're afraid to put money back in or afraid to change their approach for fear of loss. But yeah.
Yes. So, and guess what? You know, I'm one of those people, right? And I want to for all of us, so everybody's confident and we profit. And not only are we active traders, right? We're all active on this call. Everyone who comes to us wants to protect, grow, and understand, you know, how to make money in all markets in their long-term portfolio. So they want to understand how to diversify, but also, you know, not be at zero when you diversify, right? You want to turn up the rate of return. And then we want to also add to our wealth through a little bit more active trading, many of the people that come to us. So, you know, I talk about whiplash protection because if you've been following the market yesterday and today, does anybody have whiplash? You know, say yes if you feel whiplash. We were down, we're up, we're gonna probably be down again tomorrow. You know, always with options, we want to be able to do more with less. And just a legal statement so everybody, financial professionals, okay? We are mentors, we're teachers, we're consultants. But if you have any doubt about anything that we're saying here, we ask that you seek advice. Advisor. We just want to make that super clear, and we state that all of the time. I love visiting this on every single call. Let's how to make money in uncertain times. Jeremy Mullen. Remember, no position is safe. And in this presentation that I have right here before Dan goes, kind of addresses that. And the strategy is to take profits. The strategy now is to take profits. Be an assassin, hit and run. Shopping when things are on sale. I took a picture just a few minutes ago of the SPY, which is the ETF on the S&P 500. And if you take a look here, we're about, you know, halfway where we were before. Right here on February 19th, we were, what were we, Dan, like 335 or 340 on the SPY?
Yeah,
something
I
like
can
that.
give you the exact 33.93 on the SPX. So 339.
Okay, right, 339. So we went to 297 today. So the good news is we're still in a position where we could do a whole lot better than people who were buying on February 19th. You know, if we look at the S&P as a whole, as the 500 companies in that index. So now is a good time to think about adding to your portfolio, but how do we do it in a way with confidence? Because remember earlier we spoke about what if the crap hits the fan again? I don't have that confidence. So here's how to protect, grow, and profit, and a strategy that we're using with our group. Many people who are on the webinar right now are in our trading and investing group. We have people who are watching this recording on Facebook, people who will be watching this recording on YouTube. So we just want you to know that we've got your back. Once a month, Dan and I host a long-term portfolio review. We do that the Thursday before options expire, which is the third Thursday of the month. And we're showing you, you know, the different indexes that are in my portfolio, in our paper account portfolio as well. But anything that I'll be showing you are things that I'm carrying in my portfolio. You could take my ideas and swipe them, or, you know, you could look at similar opportunities in the various sectors, right, that I've chosen. So here's what I am presenting to you. There's a way to feel more confident about getting into the market right now. Determine what you'd like to have for sale. Like, let's say, and I use Coca-Cola as an example, right? Some steady eddies that maybe, you know, I sold out of Coke right before it crashed, right before, you know, it went haywire. And let's say I'd like to get back into that position. I look at the Fibonacci, and we're going to go through Fibonacci retracement and where is the current price of Coke as it relates to support and resistance today. And please, if you are in a place where it's a little noisy, please put yourself on mute, okay? Also, 100 shares equals one contract you can sell. So for every 100 shares I have of Coke, I can sell a call contract and put some extra money in my pocket that particular month. That's turning up, you know, my rate of return through collecting premium. So I could, and right now, Dan, premiums are high, aren't they?
Yeah, you know, due to the overall volatility of the markets. That's when we talk about it being a perfect time for options trading, and that's exactly why.
Yeah, so that's right. I'm going to put a nice high premium in my pocket. So here's the thing. I could buy a put contract for protection. So imagine that. I can go and I can go out and place that darling, you know, stock in my portfolio and also feel okay because I can exercise the right to sell it higher from market should that stock go down, should there be, you know, that second drop, which, boy, that makes me feel really good. And, you know, I'm just monitoring this once a month. So what does this look like? What does this look like? How to protect, grow, and profit from Coca-Cola. The underlying price of Coca-Cola today is $45.92. So if I look at the chart of Coca-Cola, and I'm not going to pull up the Fibonacci right now, Dan will talk about Fibonacci, but I am bound by a $42 and a $48 Fibonacci, those two goalposts. Okay, Dan? So if I had 100 shares at $45.92, I could sell one call contract. And at the 47 call strike price, I'm collecting $73 per contract. That's 73 cents times 100, right? And I can buy a put for protection at 42. At the strike of, I could, and it was actually 45 cents, okay? So that's $45 it would cost me to protect myself should Coca-Cola go below 42. So I'm actually a net seller because if I, you know, if I take $73 and minus $48, I'm still collecting a premium of $28 for every 100 shares of Coca-Cola I have. And I have increased my upside profit of Coca-Cola by 0.6%. You know, would be more if I didn't buy that put contract for protection, but still 0.5% every single month. That's an additional 6% a year. Is that that's not too shabby, right? Mr. Dan? Are you following me on this?
What's that annualized? That's
0.6% times 12, right?
Yeah.
So what do you all in either if you want to be vocal, you could be vocal, but if you want to just type in, would you be more confident right now going out and shopping for stocks on sale and pulling the trigger if you knew that you had a downside protection in an area where there is a support based on, you know, the technical analysis of the charts? How much more confident would you be? So, Dan, is anybody sharing here? Or if anybody wants to be vocal, or if anybody has a question around this.
It's Gary. I think it makes a lot of sense, right? It makes a lot of sense to be able to do it this way. Some of the stocks are so beaten down right now that, you know, I don't know how fast they'll rebound. So this is kind of nice to have a bracket around a reasonable training range for 2 to 6 weeks, let's say, whatever that looks like.
Yeah.
So it's a great skill to have.
Yeah, and we're going to do, you're all fortunate because you're with us, and we're going to show you this. We're going to give you the model portfolio, and this is called a collar. And there is an easy way also in Thinkorswim to not only buy the underlying, but also sell the covered call at the same time. So we'll show you that in our, you know, when we go through the platform, which is awesome. So it's not a convoluted process. To, like yesterday, because I believe that the VXX, you know, today we're sort of getting a little beating on the VXX, which is the forward month ETF for the VIX. But I went out and bought 1,000 contracts, and you know, I got a very, very high premium for the call. In fact, I sold the 40 call at $3. That on 10 contract, you know, $3, not 30 cents, $3. Is that crazy? So that's all I have to say. And I'm glad that you all see the benefit here. And this is something that we take our people through, and we're excited to do, you know, this long-term, as well as, because you have 2 houses here. You have your long-term portfolio, and you have, you know, that smaller account where you're doing more active trading within. So we want to create income, and then we want to turn up the rate of return in turbulent times. And this is what we show our trading and investing tribe. We call it.
I like it, you know, introducing new concepts, and, you know, eventually we'll ingrain all of these concepts, right? The concept of the collar that we covered, that Dawn just covered, right? But think of it like these are just different tools in your tool belt. Right. The idea is once you understand, start to understand, you know, 2 or 3 or 5 or 7 or 10 of these different strategies, you know, they all work at different times. Right? What's working now was not working 2 years ago. What's working 2 years ago was not working 2 years before that. And so the idea is that through constant adaptation, you go further and further, right? You'll start to see things that you've seen before, right? So I mean, that's the overall goal. I'm going to introduce a new strategy today that we haven't covered yet, called the butterfly. We've covered the 2 components of it, you know, just like we were doing spreads a lot lately, vertical spreads, and then I explained that, well, a condor is simply just 2 vertical spreads put together. Well, it's the same thing for a butterfly. They're just arranged a bit differently. And so you'll see that slowly by slowly, we're getting the little building blocks, right? Putting the building blocks in place, and like, oh, this is a completely new play with a completely new outlook. Fantastic. But little did you know the whole time you already had the foundation for it. So I'm going to share my screen here. One sec. And again, I apologize. My new mic comes today, so I won't have to hold this thing in front of my face come next week. Okay. Same legal statement. So I'm going to go over some trades today. These are not recommendations. This is for learning purposes only. I'm not anymore. Yeah, trading involves risk. So a butterfly looks like this on the risk navigator screen. Okay. it has two components to it. Now there's a whole bunch of different ways to build a butterfly, and there's iron butterflies and broken wing butterflies and double butterflies and Kevlar. There's a bunch of different kinds of butterflies. This is just a simple starting point, like the basic long butterfly. Okay, it's a debit spread, meaning our max loss is what we pay for the butterfly. Okay, and profits will range depending on where price lands upon expiry. Now, you don't have to hold to expiry, but the idea is in creating a butterfly, you're creating like a little tent, and you want price to like land in that, at or near that tent. So I'll show you just real quickly before I go to build it.
A butterfly net. Like I'm catching butterflies, although it's a wing, but the way I think about it is, I want to be, I want to be in that tent. I want to be in that tent. That's a profitability tent.
Yeah. And okay, so when we're putting on butterflies, right, you have current price. If you're going to speculate to the upside, I think price is going to go up and you want to put a butterfly above current price, you'll use calls. Below current price, you'll use puts. Okay, similar to like how we do an iron condor, right?
Right. So for instance, I have a lottery ticket. I told Dan about my little lottery ticket, and it's on Tesla because Tesla's sexy, isn't it? Right. I want to get some Elon Musk money. So what I did was Tesla's current price right now is $812.76. I put this on when it was in the 700s. This is a June 19th expiration, and I created a tent that has a really small. It's a 870, 875, and 880. But when I look at that, I bought actually I bought 100. I was a net buyer at 100 contracts, so it was 9 cents. The credit, the debit rather, 9 cents. So it cost me whatever, $900 to be in this. But if I get in the tent, it's a $6,000 to $8,000 payday for me. So, what is that? An 800% rate of return?
Yeah, and you can. Ticket. It's a nice little lottery ticket. I mean, you can do them very narrow like that, right? So that'd be a much more narrow butterfly, right? I'll speak to this in a second. As you widen the butterfly, what you're doing is you're increasing your cost, but you're also increasing your probability of profit, similar to how we build any spread, right? The wider we go,
the wider the tent, right?
Yeah, it's going to be more expensive. Like if we're buying it, then we're going to collect more premium for it if we're selling it. But that's how we're deciding how much risk we want to take.
And then of course, since I, was bullish and I was looking at price being at the high 700s and I was looking at the high 800s, it was a call play on the butterfly.
Yeah. So I showed you the picture of it. I'm going to build it real quick using just two verticals. You'll see that. Just look at this bottom one here. But in this case, I'm doing a bull call spread, right? So this is a 29.90, 30.10 bull call spread, and then also a 30.10, 30.30 bear call spread. So it's two vertical spreads exactly on top of each other. The center strike is the same, right? So this might look a little different to you because it's 3 legs, but I'll express to you that it's
actually 4 legs, right? It's actually 4 legs, but it looks like it's 3 legs because there's a double of the one in the middle.
Yeah, exactly. So it looks.
Which that is the way you explain that right now, Dan, is so wonderful because when I first saw butterflies, I didn't fully understand that. So
yeah, it's just we've learned the components of it already in our Monday class that we do.
Everything's a vertical. Everything's a vertical.
Yeah, but you see we have one vertical, the 29.90, 30.10, and then another opposite vertical. Yeah, opposite vertical, right? So this vertical is 20 points wide, right? 29.90, 30.10. This vertical is 20 points wide, right? 30.10, 30.30. Sorry, my phone is blowing up for some reason. I'm going to put that on off when I'm doing these things. And that together gives us, right, the same shape. So I need to like this is the butterfly, right? I'm going to deselect these two and just reselect the one where it's all built together. Like, are we all on the same page? That's the same. It's the same shape, right?
Yes, I got it. Absolutely.
Cool.
Yes.
So now let's talk about how the profit would work on a butterfly. So again, this is set up to be speculative, right? I'm saying it's very short term also. It only goes up until Friday. But this play assumes, and I don't have this play on, I'm just using it for the purpose of the example, that if you think price is just going to keep rallying this week, this is the play for you. We're currently at 29.71. For us to be profitable on this butterfly, we need to be between 29.92 and 30.27 by Friday evening when the markets close. Okay. In this case, next these out. Our cost is $2.85 per unit. So per butterfly is $2.85, right? Times 100. It's 100 shares per 100 shares per contract. So our cost is $275, right, per contract.
Per contract, and we have 5 contracts.
5 contracts here, so our net cost is $1,350. Okay, but here's the really appealing part of the butterfly. You know, it's definitely I don't want to call it the gambler's play, but it's a play that it really has the chance of having like a massive payoff if you get it right on the nose. So that $1,300 and what did I say it was? $1,350.
Right. And again, that's just what we paid. That's just what we paid to get in this trade. That's the max loss.
Can't lose more than that.
Right.
If we are at, say, 3,000 at expiry, we're going to make $3,300 profit on it.
Woo!
If we're at, say, 3,005, we're going to make $6,000 profit. If we're at,
oh my gosh,
3,010,
I'm putting this on right now.
I'm
putting
in the
this
middle.
on right now.
We're going to make $8,500, and then it also slopes down from the other side, right? And you know, as you go forward in time, it doesn't really move that much because it's only a 2-day expiry, right? Like usually we'll put these on like 20 days out, 25 days out, and that'll give you the advantage of having like a nice flat like risk curve. Okay. But you know,
okay, so let's hear from the people who are on with us, and we have, you know, we're on Facebook Live in our group, but I'm looking for comments, but certainly, who here finds this to be an exciting strategy? Who here finds this to be an exciting strategy? You can, love it, love it. Yeah, people.
I like the short expiry date. I think that's very attractive.
Yes.
Yeah, and it's good to, like for me, for example, like I have some iron condors on in my portfolio that are feeling pressure to the upside right now. So, you know, my iron condors are feeling pressure to the upside. So this acts almost like a hedge in a sort, where I'm like, all right, well, I put this on, it cost me, you know, $1,000. It gives me that like, okay, I can stay in my condors for another couple days, right, just in case. And then if I get a pullback, it's all good, right? If I get a pullback and this play turns out to be a zero play, that's fine because my condors will be up, right? Yeah. More than this would lose. So
this is a great way, right, to hedge. You know, we're bearish, right, on the call side on the condor that we're in, and this is a great way to hedge that call side with, you know, a bullish play like we're doing right here. Yeah.
Wish I knew that in the past.
Well, you know it now, and we're holding your hand, and we're so excited that you're learning about it. And remember, it's all it is two verticals. It's not so complicated. It's just two verticals. So if I were to reiterate the steps that Dan just said, okay, number one, let's say I'm bullish on the SPX. So I'm going to look at calls, right? So I'm going to look at, because what we're doing is we're buying. So if we bought puts, we'd be bearish. If we're buying calls, we're bullish. And we do it where, on one side, we're whatever, you're 20 apart on each side, but you have that same middle leg. So it appears to be like a 3-leg play, but it really is 4 legs.
Yeah, and it's a useful tool either on its own, right, or to hedge a different position. Right? And one thing about butterflies is, I love how flexible they are. So I'll give you an example. So here's a condor that we have on. And guys, I'm just going to pause for a second. If you feel lost right now, that's okay. There's some people on the call who've been working with for a few weeks or months, but we'll catch you up if you do decide that you'd like to be part of our group. But for those that have been with us or those that have a bit more experience in options, this next part's for you.
I'm having ahas today by the way you're presenting this, and I've been doing this for a little while longer than some people are with us. So, thank you for your brilliance, Mr. Dan. I call him Dan, the options man. Dan, the options man.
Gotta get that. So here's a condor. So here's a condor that we put on a little while ago. As you can see, right, like we had a really big movement the last couple of days. It's down, right? It's down $800. I'm not really sweating that too much because our max profit here is $2,400. I don't really start to think about adjusting a condor until I I'm willing to lose 1.5 times what my max profit is on this trade. So this is down $846. The worst thing you can do when you're trading market neutral plays is be overly aggressive with your adjustments, right? Especially with how much the market's swinging. Like, geez, for all we know, we could be back down to 2,800 in 2 days with how much the market's swinging. But
and already, and just so you know, already, let's see, the SPX, right? It's down from where it was an hour ago. So,
yeah,
right.
So, but if I'm looking at this play and I'm thinking to myself, like, oh, I do kind of want to take some risk off the upside. One way to do that is to turn the upside into a butterfly. So let's talk about how we would do that. This is why I love options. They're so flexible. You can do so many different things. You can control your risk as much as you'd ever want to. And there's simple ways to do it. So I'd go to the same expiry. So this is June 19th. So I'd go to June 19th. I don't need you guys to fully understand all this right now, but just bear with me and look at the picture at the end. Like Bob Ross, there's no mistakes, just happy accidents.
Bob Ross, oh, I love him.
So to turn this call side into a butterfly, right? Right now we have half of it already, right? We have sold the 3,100, we've bought the 3,110 already. So we need to sell the 3,100 again, but buy the 2,990. That's how I would adjust that. Sorry, 3090. Go 3090. Buy. Vertical. 3090. 3100, right? So you see how this is one half of the butterfly, the 3090, 3100. The other half of the butterfly is the 3100, 3110. And this should give me a nice happy butterfly in the end. So you see how, like, with making that adjustment, right, we've eliminated all of the upside risk.
Wow.
And we've given ourselves a little lottery ticket also. So I got time.
You just placed a vertical. That's all you did to create that little butterfly.
Here's the thing, right?
In the condor.
this is too much of an adjustment. 10 contracts is too much, right? Like what we should probably do here is maybe something like this, in 5 contracts. It gives us more space, still gives us a nice little area here we can profit, but that moves our break even up, 10 points, 15 points or so. Gives us some room to breathe on the upside.
Love it.
And then if it pulls back, we're still profitable, right? We make less in the middle here now, but it's a hedge, right? Hedges are designed to you earn less, but it increases your probability of profit.
So I know we just laid down a whole bunch of brilliance, and I just want to remind everybody, this is playing off of the building blocks that we take you through as our group. People who are in our group, we hold your hand. We have you starting out with paper accounts, so you're not losing any of your money until or you're not using any of your money to place trades until you're super confident, until you graduate to that point. And I want to congratulate Ms. Britt here, if she could say hello in the chat box. She placed her first live trade with real cash yesterday after being with us for a month and a half. So Britt, she says yep in the chat. So, and then when you get to that point, we just have you doing one contract, right? One contract.
Yeah.
So yes. So what is so cool is our students, we have a WhatsApp group, right? A WhatsApp group. And we have our students sharing. Now, one of our students shared something with me yesterday, and it would have been, I think it's still a great opportunity. And if you want to share, Mr. A, you can, but I'm not going to share it here because this is the value of being in our group. And I'm looking at a trade based on what he shared yesterday, a bullish play on a company that's very relevant as it relates to what's going on with COVID, and had a big pullback, and we thought it was time to shop. And the way we do that is to create a bullish trade. So what he and I did yesterday was we looked at how are we bullish. We either buy a call spread or we sell a put spread, and we determined which one we were more comfortable with. There isn't a right answer. There's just your answer, and you put the trade in. But I'm actually going to take action on that trade. So thank you very much for tipping us off, and I'll share that, or if you want to share that in the WhatsApp group for our special group, please do so. So Dan, is there anything else? I wanted to make sure people here knew, and then if there were questions.
No, maybe. I was going to show, this is one that I have on right now. You can see that it's not really profitable right now, but if by May 29th, we're in this little zone here, 29.40, this can make nice 30 grand or so.
What? Wait, say that again?
Yeah.
How much?
So it can make, well, look, if it's between 29.54 and 29.25, it'll make $20,000. If it's
all right, so let's
max,
put a big prayer out there for Mr. Dan, because
38,000 would be nice. We hit it right on the nose.
You could buy a nice surfboard with that money.
Yeah. Buy a house in many parts of the country with that.
Right. So that's why we love options. You can tell we're super passionate about options. I don't know, many groups like this. Our tribe is a tribe of determined, eager, purpose-driven, heart-centered, people. We don't allow nasty people into our group. We allow kind people in our group. We have a strict red velvet rope policy, 100%. And if you think you fit that criteria and you want to explore what it's like to be working with us, email me directly, or Dan. I am Dawn at Options for Wealth, and I'll just turn up our slides. And we also want to have you all know that we're doing something special on the 29th of May that we'll introduce to you here shortly as well. So going back to my PowerPoint, the virtual summit. Oh, I didn't, this date should be Friday. Let me do this. Boop. This should be Friday. There we go. File, save. Okay, play from current slide. All right, so Friday, May 29th, from 12 noon Eastern to 3 p.m. Eastern, we're going to do our virtual summit. And it's a great place for our current students to come to sharpen their skills. I sharpen my skills every time we do it. We invite the world to come and experience what it's like to be in our tribe. And we go over, you know, the 101 of options, and I can never hear it enough. I can, you know, those quadrants that you break down for us, Dan, and just settle into that knowledge. What we talk about is options brain. And if you remember the Matrix, right? Neo is asked, do you want the red pill or the blue pill? And then Neo takes the red pill, right? And then all of a sudden, his brain is on steroids, right? He gets to learn how to karate and drive a helicopter and all that. Options brain is just that. I will tell you, the day you wake up with your options brain, you will feel superhuman. You will want everybody that you care about to have options brain with you, because you will have extreme confidence knowing that you don't have to worry about money anymore. And I'm serious when I say this. Dan, are you with me on that? The exhilarating feeling of living options brain?
Yeah, it's just the freedom of it. I mean, you know, it's a pretty great life just trading options full time, to be honest with you.
Yeah, and even if you don't want to do this full time, the thing that you do full time, you're going to enjoy it that much more, because you're going to be in a position where you don't have to take shit. You know, basically you can say, I'm quitting. I'm looking for another job, and I have this other thing that's going to, you know, support me in between. Britt said to me yesterday, and she could text it again, and maybe she did text it. She said she feels sharper in all other aspects of her life because her options brain is starting to click in. That's what she said.
Truth.
Yeah, truth. So optionsforwealth.com. If you're on the call right now, if you're watching this recording, please go to optionsforwealth.com. It's our lead page for getting, you know, the reminder for the session. We'll give you the Facebook, I'm sorry, the Zoom instructions. You'll get a reminder. So optionsforwealth.com. How do you get in on the action? If you want to become part of our group and you don't want to wait until the 29th, email me and I'll set up a call with you. Dawn at Options for Wealth, Dan at Options for Wealth. What we do is we give you immediate trade ideas through text via our closed WhatsApp group. And I'm going to put in the trade that I'm taking just right now. Dan will share the SPX trade that I'm waiting to get filled on right now. So he and I subscribe to vetted services. We have top partners with Investors Alley. We are going to secure a partnership today with someone that we'll talk about next week, but they have amazing learning platforms and they're just wonderful content. Dan and I don't want to create content because there are many people who have created things. We don't want to reinvent the wheel. We want to be these people that hold your hands and help you get options brain, right? Because you're not going to get options brain by just watching somebody else's video.
Yeah, if anything, there's already too much content out there. We'll just find the good stuff and help you understand it.
Right. There's too much good content down there. It's going to be a waste of time for us to create new content, right? Even with what I do with mindset, I'm not creating new content. I'm going to the teachings of Abraham. I'm going to Think and Grow Rich, right? Those are what I go to when I help people to create an attitude of asking, awareness, alignment, action, and accountability. So why reinvent the wheel? Be that person who facilitates the greatness in people, because you are going to be the hero of your own story. We're not the brilliant people here in the process. You're the brilliant people. We're just facilitating your brilliance. So we have an online portal where we send activities And we have one-on-one mentoring also at reduced rates. We have clients from time to time do one-on-one sessions with Dan. And I do special little sessions just for my people when I feel like Friday, Dan, I didn't tell you this, it's a secret, but I'm doing a little lady day trader session. And I'm getting all my ladies together who are in our group, and we're going to rock I'm going to create some t-shirts and hats with, let's talk about that. We're going to start selling Lady Day Trader. I got the URL, and the ladies are just going to get their trade on together. And I think that's kind of sexy to be a lady who knows how to day trade. You think that's sexy? I think that's kind of sexy. So, I know I'm being silly, but listen, in a time when everybody's so weighed down by worry, connect to this energy of abundance and silliness and learning a new skill that'll serve you for the rest of your life. Think about it. When you retire, you could be making money. You could be in bed. You could be on the beach. You could be in front of your computer anywhere, because you will have options brain. And just like riding a bicycle, options brain doesn't go away, right? I remember when I first learned how to ride a bicycle with my dad. I never fell off the bicycle after that, unless, the other day I had my clips in my bicycle and I was ready to take a turn, and these people just kept on going in front of me. They didn't realize that I had clips in my I was clipped to Britt's bicycle that she gave me. Thank you, Britt. And I fell in the street, but I digress. You get what I'm talking about. Options brain never goes away. All right. Enough enthusiasm.
It'll stay with you, right? I mean, this is a skill you can do when you're 85 years old, laying in
90.
Bed, 90, yeah. There's no
90. 110. 110. I'm going to be
sharp.
You know what? I was watching Todd Chrisley last night. Anybody, do you know what that is? Chrisley knows.
Nope.
On E. Don't get addicted. And then he was asked what he's thankful for, and he says, I thank the Lord, and I thank the Lord for Botox. So I thank the Lord. I thank the Lord for options, and I thank the Lord for Botox too. And Zoom for creating this way of allowing us to look a little bit better. Okay, so Andrew's like, talk to you soon. We are such nerds. We are. We're the options nerds. We're the options nerds. Talk about Geek Squad. We love you. We're so happy that you've been with us. Dan, you want to say anything else as we say?
Thank you. Come to the webinar on next 2 Fridays from now.
Optionsforwealth.com. Optionsforwealth.com, and we'll see you next Wednesday for another free call. Okay.
Cool. Thanks.
Bye now.